Hello and welcome. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, and mentor. Our guest today is James J.D. Allen. Before becoming a Jake and Gino student and multifamily investor, he was a Marine Corps instructor and veteran with over 25 years of leadership experience in information technology. JD is dedicated to turning underperforming assets and turning them into profitable complexes and continues to demonstrate his success personally, holding over 100 cash flowing units. Welcome to the show, JD.
Hey, how you doing, Gino?
I am doing good. Let's start with the story, JD. I love what you said early on before we started recording. You were like, you know what? I started out with a couple duplexes, then mobile home parks, then I met Jake and Gino, started doing seller financing. Start from the beginning. Why multifamily? Why real estate for you?
So I was actually investing in the stock market and doing some of that stuff, and it just wasn't doing it for me. I didn't feel like I had any control, and it was really more of a guessing game. So felt like I was always taking chances. Things just weren't going well. One day I'd be happy, the next day I'd be sad, and that's how it was. And the thing about real estate, I knew if I could figure it out and how it worked, I knew I could make it happen. I knew I could get some passive income going, that sort of thing. So
It's interesting that you say that. I got to really rip that comment down really easily for everybody. This is why people don't make money in the stock market, because when JD and when Gino are really feeling happy, they're going to push the buy button. And what happens when they're happy is everyone else is happy and the stock price is up. When JD and Gino are feeling a little sad, they got yelled at by their spouses, or they got, yelled at by their kids, or they had a rough day at the job, they're sad. Everyone else seems to be sad about the same time. Stock price goes down. So they buy high and they sell low. And that's the problem. I mean, it's such a hard thing to do the stock market if you have a long-term mindset. And JD, you can't even have a long-term mindset anymore. It's quarter to quarter with these companies. The Fortune 500, the Dow Jones 30 keeps rolling over and over. And what you said about real estate with control and figuring out, what did you need to figure out in real estate?
So I really didn't understand underwriting. It was still back to that gut instinct. It was like, okay, well, this looks like a good buy. I'm going to go for it. Let's do it. And some of those got lucky. Now, I'm not going to lie. I did. It was the same thing though, right? Sometimes it was good. Sometimes it was bad. But yeah, some of them were pretty lucky. I don't know. I did start with a duplex though, and it got lucky. It was in Asheville, and Asheville was really on its way up, and made a really good amount of money on that one. So it was a good flip on the first one. But
Okay, so from that first one, you got lucky. What would you say some of your mistakes were on? Let's talk about the mistakes on any of your deals. And listen, I know there's you need the underwriting is difficult, but there's a lot of other mistakes. For instance, for me, not understanding due diligence, selecting the wrong market, not understanding financing, buying in the wrong part of the market cycle. I could list so many more losses than wins. But for you specifically, okay, the underwriting is bad. What else did you not execute on these bad deals that
so
went bad?
my second deal was in a really small town, a terrible market.
Hmm.
It was a high cap rate. If you're looking at it in a cap rate situation. And I bought it, and it immediately flooded. So it was in a flood zone and bad market. So within like a month of owning it, I was down like 20K. I was already losing money. So, you know, I I had it on seller finance, which was a good thing. But I also knew I wanted to get out of it because I did not see anything good coming out of it. So that was probably one of my biggest mistakes.
And so, how did you learn seller financing?
Reading a lot of books. Reading a lot of
Mm,
books. I actually believe it was Brandon Turner's book. I can't remember the name right now, but he had one on like zero down or something like
yes.
that. And I had read that book, and I was like, all right, I'm going to try this.
Wow.
So yeah, went out and tried it.
So you went out and tried it. Buying in a flood zone, JD has no buy right criteria. He didn't know buy right, manage right, finance right, did he? And that's one of those things where it's okay if you're buying in a flood zone, if you want to buy in a flood zone and you understand the risks and you know the insurance is going to be higher. And if something does happen, you have to have some more reserves. But if you don't know that and you're playing the stock market and taking risks, that's what ends up happening. The next deal, you're going from duplexes. Did you buy a mobile home park then, you said?
Yeah, so I ended up buying two duplexes and a triplex, and I was like, so it worked out because the guy I had done seller finance for on my triplex had a mobile home park. And so he didn't realize what it was worth. And so he came to me and he was like, I just don't know if I can sell this thing. And it was $150,000. I don't know if you know the value of mobile home parks now, but like
Yes.
$150,000. And I didn't have the money. I didn't have the money. So I was like, I was close, but I had to start going and asking people, and, got some friends to jump in on this with me and paid them a little bit of a interest rate on it over a few months, and bought this thing for 150K and sold it for over 2 million. It was I
Wow. So
mean,
let's
a
talk
year
about
later.
that. Yeah. So 150K. How many was it? Was it lot rentals? Was it what was the deal look like?
Yeah, it had about 75% owner, park owned homes, and
Yes.
then like the other 25 were tenant owned homes. And as soon as I bought it, I was like, I got to learn this thing. So I started reading on it, researching how to value it. Frank Rolfe had a lot of, good information out
Yes.
there. I don't know if you know him, but he was really good. So I learned how to value it. And so then I learned how to push up I learned what I needed to do. So basically, I just started giving the tenants the homes. And I actually reached out to Frank, and he was like, I would make sure you get as many tenant owned homes as possible. And yeah, it was off to the races after that. It worked out really well.
JD, this may be a hard question for you, but what makes you take massive action like that? Because for most of us listening, fear comes in. And even though we've read the books, even though we've read the Brandon Turner books, the Jake and Gino Wheel Our Profits book, $150,000 is a lot of money into something I've never done, asking friends to participate and not really sure if it's going to work out or not. How have you trained yourself, or what instincts do you have to say, I'm going to go for it no matter what happens?
I was just never too concerned about the lot. I was like, if it's 150,000, I feel like I can make that up somewhere. That's how I
Mhm.
looked at it. And the craziest part was I asked so many lenders. I probably went through 100 lenders and nobody would give me money.
Really?
Yeah, because they were like, it's falling apart. It's not worth anything. And I asked some so-called experts on bigger pockets at some of those places also, and they were like, stay away from the deal. Not a good deal. It's not going to make you any money. And it ended up working out okay. So
I wish JD had known Gino back then, because Gino would have given the JD the money. Gino would have partnered with JD, because 75 homes, it's basically $2,000 per lot. It doesn't take a genius. Even if you're collecting
yeah,
$200 per lot per month, that's $2,500. You're getting more in lot rental for the year than what you're paying for the lot. I mean, come on. And you put like a couple hundred grand into it. It doesn't take a rocket scientist, but there is a lot of fear, especially not being able to do it. So you make this windfall of
right,
equity. So that's
right.
what people have to understand. You're not making money when you buy real estate, although JD did, because he bought it really well and he probably cash flowed, but he made money on his exit. He crystallized the equity and pulled out a ton of equity. What did you do with that capital then after that?
I bought another one. I bought another one right at about the same time and flipped it. I flipped it really quick. I mean, within a few months. Because now I kind of had, I knew what I was wanting to do. Um, and then I started reading more about like apartment complexes and all those things. And I was like, I really need to get out of this market because, mobile home parks, there's a lot of crime and stuff involved in that as well. So there were some things that we had to deal with.
Mm-hmm.
But that's when I really started making a transition into the apartments. And
I,
it was
I
perfect timing.
I love that, because it's think big but start small. You're starting with a duplex, then it's another duplex, then it's a triplex. Most people will say, that's too small, but it gives you the experience, it gives you the credibility, it gives you the confidence to be able to do it. And then from there, you buy your first mobile home park, which to say has a lot of hair on it is like saying a bear has a lot of hair, because
Right.
it had a lot of
Right.
hair.
It
But I
is.
love the fact that you may not even have known, but your exit strategy was to crystallize the equity, move into the next one, and then move into the next one. And one of the skills that you have is you're constantly being curious. What's the next step? Where can I and you're doing this with the conveyor belt that we teach in mind. You're trading up your assets and understanding that mobile home parks, there's a lot of positives, but there's a lot of negatives. You want to deal with certain of those elements. And you probably said to yourself, it sounds like, I don't want to deal with that. These apartment complexes, they sound pretty interesting. How do I get into it? At what point did you start getting into apartment complexes?
It was right after the second mobile home park. So I actually had a lot of crime there, and someone was murdered in one of the mobile home parks, and so it was like, I can't deal with this anymore. So I was like, I went and bought a little 7 unit. I was like, let me just go buy this, see how it works out. And then I'd done another seller financing deal on an 11 unit, and really just sat there and talked to the owner off market on making it happen. But yeah, from that point, everything just seems to start falling into place.
JD, with the seller financing, can you give us a couple of tips on how you make it work? Because everyone's got their own, way to do it, their own strategy. We look for motivated sellers, obviously. Sometimes it may be challenging to work with brokers. How are you successful in pulling off seller financing on so many different kinds of deals?
So man, I made so many phone calls. I swear, the first when I didn't have any money, I called maybe uh, I don't even know, 100 or 200 people. I mean, I just kept calling. Was like, can we work out a seller financing deal? And everybody's like, no, hanging up. We're not going to do this. Where are you here? They don't do that in North Carolina. What are you talking about? And just kept, persistent. And finally, it started to work out. Now I'm a little less. I don't know if I don't make as many phone calls, but I understand what I need to say now. I'm a little better at negotiating. So I
Hmm.
really start with, in my mind, I'm going for bank financing.
Hmm.
And then the seller says, hey, this, I need this price. And I'm like, well, I can't meet that price with bank financing. So you're going to have to talk about something else. And at that point, then we start discussing seller financing or something, outside of a bank.
Hmm.
So
It's interesting because the first strategy is where most people come out of seminars and they're just trying to hit up seller financing, looking at every single deal as a seller finance deal, when what you should be doing in actuality and reality is what you're doing with your second part. Just looking at this deal, if it works traditionally, and if it doesn't, then let's use the seller financing or the creative component into it. When you joined Jake and Gino, what were the challenges, the stuck points that you were having before joining the community?
So I didn't know really how to manage. I really didn't. I didn't know how to manage the assets. I had some third party managers that were terrible. They were just awful, to be quite frank about it. And so that was the number one thing. I wanted to understand what I needed to do to keep these things running smoothly. Um, the other thing was, I didn't really understand, like, how to put together a toolbox, and that's something that I've kind of got now. It's like,
Hmm.
I know I can go flip. I can take these flips and put 5 flips in and go buy an apartment complex. Or I know if this isn't going to work, I can go syndicate. There's ways to get every deal done if the deal makes sense, and I think that's what I was missing prior to.
Wow, that's a huge revelation to a lot of people because they think the only way you can get into multifamily is if you have money for a down payment. And I learned that early on. No, you can syndicate and raise money from investors. You can partner up in JV. You can seller finance, and you said it so well. There are tools in the toolbox, and the more tools you have, the more success you're going to have. So, all those 100 people that you called, if you had known all those strategies, you probably would have closed 3 or 4 of those deals, right?
Yeah, yeah, 100%,
Oh,
100%. The
and
other big thing that I knew I wanted to do, but I didn't know how to do it, was scale. Like, I knew I wanted to scale, but I wasn't quite sure how to make it happen. I knew I was going to run out of money at some point, and once I run out of money, I didn't know how I was going to get to the next step. And
mhm.
so the syndicating side of that is, it's like, I'm running out of money. I can syndicate now. Get some other investors in here, and I'd never really thought about that before.
Let's talk about your recent refinance because I think that's a huge win because that's another tool or strategy that you can use to pull capital out. How did you find that deal? How did you add value to the deal? And ultimately, the exit strategy, crystallizing the equity. How did that work out?
Yeah, that was another one of those deals, just calling people. That was an off market deal. Actually, it really wasn't calling people, it was more of a relationship that I had with a broker. And she reached out to me and was like, would you be interested in this deal? Um, I think we talked about it on Closers Club. It was originally just a 17 unit under contract.
Mm-hmm.
and it didn't make sense. It was flooding. There was just falling apart. Just wasn't going to work. So I walked away from it. A couple weeks after that, we ended up discussing it again, and I was like, if you come in at 300, we'll make this deal work. Um, Still wasn't up for that, and then they had some houses tied into the note. So I was like, all right, let's do this. Let's go back to the original contract price. Let's bring these houses that are kind of falling apart too back into this deal, and let's make it work. And I believe you called it the wedge method or something like that. But what we did was we financed these things without the houses on our note or on my note. I think there was one house on the note, and then went in, renovated everything, changed the value, sold the houses, and refinanced the. Actually, ended up refinancing the complex just a few months ago.
Wow.
At
How much did you pull out of that complex?
over a couple $1 million, over a million, maybe 1.5 million, something like that.
Wow. And
Yeah,
that's life-changing money, isn't it? I mean, like from a
yeah,
17 unit little crappy complex that we were looking at to pay 300. And I think you understand there's value to create. You're creating value from those, selling the houses off, taking that, and then you're owning it. Now you own the 17 unit and it's cash flowing for you, correct?
yeah. It is. I think when I went back and looked at it the other day, but selling the house, I've still got one house I haven't sold, and it's worth way more than it was initially. But like I think altogether, selling the houses and the equity and everything, two, maybe around $2 million total, clear after everything.
So this is something that I really have to stress to the listener right now. JD is not talking about 100 unit apartment complexes here. He's talking about a mom and pop 17 unit apartment complex and $150,000 mobile home park. As you, the investor, can understand where the value is and how to create the value, Jake and I, we did the same thing. We bought a 22 unit deal. We peeled off 4 units, sold the 4 units, doubled from what we bought, and now the 6 units are for sale right now. And we're going to be doing the same thing. I don't think the size really matters. I think the quality really matters. And I know people want to get the scale and do whatever, but if you're in the real estate business, just being able to buy these assets that are undervalued, then creating that equity and pulling that equity out. That's what the business is. It's, rinse and repeat. And then you're getting that equity and you're able to get into bigger deals and to get into bigger deals. That's the whole idea. I don't know if you want to expand upon that but that's the way I see it.
No, I see it the same way. I always hear cash flow, but I feel like you got to have both. I don't want to lose money month to month, and I also want to see the appreciation. If I don't have appreciation, it really doesn't do anything for me. I got to see that too. So, you know,
He's going to the boot camps with Bill Ham, that's for sure. Because it's interesting because cash flow pays the bills, but equity makes you rich. And I think that's
right.
probably something that you understood because before you joined, most investors are lured in by high cap rates. Oh, high cap rates, low price, cheap real estate, great cash flow. Yeah, well, you know what? Cheap real estate tends to stay cheap. And there's no appreciation of equity. There's no crystallization of equity, no matter what you end up doing, unless you buy it for 10,000 a unit and you may sell it for 20,000 a unit. But I'm talking about general average pricing of what cap rates are. So don't make cap rate your only metric to invest in real estate. I think that's really important, JD.
Yeah, and I can't remember his name, Gino. I think it's Nikolai, but he talks about cap rates, and you've had him
Yes.
on the show a couple times.
Yes.
I agree with everything he says. He's like, if you're in this market and you have a 6 cap or a 5 cap, and you're comparing it to an 8 cap here, you're still making the same amount of money. You're not. It's not. It doesn't really matter, right?
Yes. Yeah,
So
Nikolai Ray is great. He's up in Canada, and his whole idea is if you're buying at a cap rate, first of all, you're a value investor. So cap rate really is pretty unimportant because the value is not there. The rents are lower, NOI is low, so you're already buying something at a depressed NOI. You just have to understand, like JD does, that can you add the value? And don't listen to Mr. or Mrs. Broker by saying, yeah, rents can go to 900. Well, can they go to 900? And the other thing is the budget. What can you do with this budget? Are you really performing and creating a budget that makes sense, that's realistic, that's not like, oh, yeah, you have to understand that. And what Nikolai says, and I'm going to try to get this formula for everybody because this is really important. He's talking about getting the stabilized net operating income, whatever your NOI is. Let's say your NOI is $10,000 and you can get it stabilized to $20,000. And you divide that by the purchase price of the asset plus any repairs, any capex, that cap rate that you get from that formula, if that cap rate is higher than the market cap rate, then you can buy that asset and then you can decompress that cap rate down to a 3. So, for instance, if you buy an asset that has a cap rate of 2, but you're in a 5 cap market, you're like, I'm overpaying for this. But you know what? JD knows that 75 lots over there, baby, they're really worth a lot more. So that 2 cap all of a sudden becomes a 12 cap, and then he can go and sell it to the market at a 5 cap. He's decompressed it. He's added so much value and pushed up so much value. That's what you need to be doing in real estate. That's how you get rich. Cash flow can make you a lot of money, but in the short run and in the middle run, that equity and that buildup of NOI and that appreciation is what's really going to make you rich.
100%. 100%.
What is in store for JD in the next 5 years? What are you looking to do?
So I really want to. I want to keep scaling. I am going to push this apartment. I'm gonna really push to get quite a few. What I wrote down was 500 individual and 1,500 either syndicated or JV. That's my goal.
Wow.
Now, and shoot for the stars, right? That's what I'm going for, and I'm gonna get there. I'm gonna get there.
What markets do you want to invest in? Buy right criteria? Do you have all that figured out?
Yeah, so I'm in Winston-Salem, Greensboro, Charlotte, that little circle right there, Thomasville, High Point. There's a few other things that I've looked at. Some are down in Florida, but I really haven't gotten into that market yet. But that's my area.
You got a great market. And for anybody listening, especially the Jake and Gino students, JD is active in those markets. He's looking for partners. If he has deals, he's looking for capital. JD, where can the listeners get a hold of you?
They can reach me at jd.allen@bmpapartmentinvestments.com.
That's going to be in the show notes. If you want to leave your cell phone, you can leave your cell phone. But
Right.
listen, I mean, the story is phenomenal because when JD started, he bought a duplex and then he bought a second duplex. He had beginner's luck. The second duplex really didn't work out so well. It's like I got in a flood zone. I didn't join Jake and Gino yet. I have no buy right criteria. I got lucky in the first one. I don't have the map. I don't have the process. I'm going to buy the second one. Didn't work out so well, but then he bought a triplex and then he ends up buying a mobile home park for 150 grand, which goes in value up to 2 million bucks. Sells it, pulls the equity out, buys another mobile home park, and gets into managerial problems. That buy right is fine, the finance right is fine, but the manage right portion of mobile home parks to him doesn't satisfy his needs and his values. So he's like, I've got to find something that works for me. Looks into apartments, starts out with a little 7-unit, then buys an 11-unit, continuing to use seller financing. He joins Jake and Gino and starts learning there's a toolbox with all these tools. So, if you have a hammer, everything looks like a nail. I think JD had the hammer and everything looked like seller financing. But once he understood, wow, I've got syndication there, I've got creative financing there, I can joint venture and partner up with people there. There's a lot of different tools here. And oh, by the way, refinancing $1.5 million plus out of one of the deals, that's another way to get into another deal. Understanding all of those and then putting that together with his buy right criteria, selecting the market, that's what I think is going to power him now and going forward to be able to hit those goals. So, congratulations, JD. Well done. Any last words before we sign off?
No, man, I just appreciate you guys. You've helped me a ton. So
Thank you, brother. Hey, listen, reach out to JD. Anyone who wants to get into real estate, anyone who wants action steps on what should they do to get started. I mean, there's no fear in him. He started, and not to mention, he's read 400 books in the last 6 years. So to take away and to say he got lucky, that's really the understatement of the year because there's a lot of work involved in this, a lot of work involved in anything in life. Getting out there, he's part of the community, but he comes to every single event. He's on every Monday masterclass. He's asking questions. He's engaged, and that's what's going to make you successful. So listen, it's been an honor and privilege to have you in the community as well, and awesome show. I really appreciate you being on today, JD. Thanks.